Hey guys, what's up, how's it going? Welcome back for another video. In today's video, we're going to be covering VEQT, the Vanguard All Equity All-in-One Fund. So we're going to talk about some of these funds. We're going to do a deep dive inside the ETF, and I'll give you guys my opinion on why I think these funds like this one are such good funds to hold inside your portfolio if you want an easy way to invest into the stock market. So if you guys watch my channel, you guys know that I'm a huge fan of ETFs, but I'm also a huge fan of actually buying individual stocks inside my Canadian-based stock portfolio. And if you guys want to see exactly what I hold inside my portfolio, be sure to check out Blossom Social. There's a link in the description of the video. You guys can use referral code Robin if you guys want to support the channel, but you guys can go in there and see access to all the stocks I currently hold inside my portfolio, and you guys will be updated on when I make any changes whenever I buy or sell stocks inside of my portfolio as well. Even though I love buying individual stocks, there are lots of good reasons to buy these all-in-one different portfolios from Vanguard. So VEQT is a fund that you can buy, and it basically invests into the broader stock market with only the click of a button. And if you're just a beginner, or you're getting started, or you're busy, or even if you have multiple portfolios and you want to just set up one that's kind of more of a set and forget it approach, these kind of portfolios or these kind of ETFs make a lot of sense. And with just the click of a button, it makes it pretty easy to manage them and keep them going in the long term. So before we go any further in the video, let's quickly kind of cover some of the benefits of holding some of these one fund solutions such as VEQT inside your portfolio. So the very first benefit that you're going to get from holding a fund like this is going to be instant diversification. With just a click of a button, you can hold thousands of stocks inside your portfolio, and it's really just as simple as that. The other benefit of a lot of these funds is that they actually have fairly low management fees, especially for what they do. So you can invest very easily, you can kind of set it and forget it, and also at the same time, you don't have to pay super large management fees. That is, it's very similar to traditional management fees. They actually are very, very low, and they're very, very much affordable. And the last benefit is that with just a click of a button, you can purchase more shares, and you never have to actually rebalance your portfolio. You just buy the fund over and over again, you set it and forget it, and then maybe every once in a while you can take a peek at your portfolio and see how it is doing, but you don't have to rebalance, you don't have to keep track of anything. Everything is actually managed perfectly for you. And I love these funds myself because I think they're very easy to manage, and I also like generally will recommend them to beginners because it's easy for beginners to get started, but they're also very good for seasoned investors such as myself. I actually use different funds. I don't have an all-in-one fund myself that I use inside my portfolio, but I do use different ETFs, and I kind of build my own all-in-one portfolio. But as I get older and I kind of build more different accounts, it definitely makes sense, and I probably will be using a lot of these one fund portfolios just to kind of keep things easier for me to manage, especially as I get older and I build different types of accounts and my portfolio expands. Just a quick little overview of the benefits of funds like VEQT. So let's actually jump inside the ETF. Let's jump inside it and let's take a peek at the holdings. Let's kind of assess and do a deep dive of how the fund works. So let's jump inside that section of the video and let's kind of take a peek on the Vanguard website how VEQT works. Hey guys, what's up, how's it going? So now we're in the part of the video where we're going to be focusing on actually diving inside VEQT, and we're going to kind of take a peek at some of the big features and kind of let you guys know my thoughts on these different things. And like usual, I'll show you guys how to kind of assess some of these ETFs and do a bit of a deep dive here, kind of focusing on the fundamentals, of course. So here's the Vanguard website. This is the VEQT website. I'll put a link in the description of the video if you guys want to kind of reference this for yourself. You can check out the website. They also have a fact sheet. A lot of ETFs have these quick little fact sheets. We'll open this up here so you guys can see. You can go in the fact sheet. It has all kinds of cool information that you can kind of see everything, and a nice little different graphs and nice little infographics and different things that you guys can take a peek at. I'm going to focus on the main website because we're just going to go through this really quickly, but that's an option for you guys if you kind of like that more visual representation of things. I think they're really cool, so it makes a lot of sense. But anyways, let's take a peek at this fund here. So this fund has been started since the beginning of 2019, so it's a relatively new fund on the market. I have since inception set up here so we can see the returns from when the fund was first started all the way to now. We can see over the past 5 years, the past 1 year, and year to date, and yada yada, so you guys can kind of peek at that if you want. The market price of the fund right now is $32 Canadian. NAV price is $32. Management fee is 0.22%. So like I mentioned earlier in the video, the management fees of these types of ETFs, especially from Vanguard, are very typically low, which is really good. I mean, you pay 0.22% to buy a fund that you just have to click. You could even, in some brokerages, set it to automatically take it out of your account. Very easy to do. You don't have to do anything. Everything is done for you. It's a very, very low fee. Very, very nice thing. 12-month yield. This is the dividend yield. So the dividend yield of the fund is 1.58% over the past 12 months. Obviously not a super high dividend yield, but this is a more growth-based, kind of like an international S&P 500 kind of thing, if you want to think about it like that. So obviously it's not focused on dividend yields. The yields are there, they will grow over time, but obviously it's not really focused on that. It's more focused on stock appreciation with a little bit of yield sprinkled in there. The distribution is also annually, so this basically means that you get a distribution once per year. Actually, it's an important thing to note. If you like to see the money coming in your account on a regular basis for whatever reason, this one only gives, it looks like, one payment once per year. So it's not monthly, it's not quarterly, it's not semi-annually, it's actually annually. So that's an interesting thing. I actually didn't know that before, but just important to take note about that. Here's some highlights of the fund. I'll go through this really quickly so you guys can see. So the fund highlights seeks to achieve its investment objective by primarily investing in equity securities. The Vanguard ETF may also do so directly or indirectly through investment in one or more exchange-traded funds. So it does hold multiple funds. We'll take a peek at the holdings here really quickly, but basically the whole point of this fund is to have 100% equity securities. So it's 100% into equities, which basically means that that's 100% into stocks, no bonds or nothing like that I know of inside this fund, just 100% equities. And the portfolio asset mix may be reconstituted and reconstructed from time to time at the discretion of the sub-advisor. So basically saying that they can change things whenever they want to. Obviously, they're not going to make any major changes, but they might make small tweaks and different rebalances, on a yearly basis. But the whole point of owning these funds is basically so you don't have to do it yourself. So it's super cool. We can see the actual cumulative returns and whatnot. I'm going to see if I can actually get some percentages. Here we go. So we can actually see the percentages. If we go monthly, we can see the different monthly returns. Obviously, we can see like there's going to be big swings in the market depending on the year, right? 2020, obviously, in the beginning is going to have a really big dip, but then things recovered. We'll go quarterly. You can see the different quarters. So 2022 has started off -4%, and the second quarter is down -13%. So you can see how the overall stock market internationally has really been affected, this year from things going on. So we'll see. We're still waiting to see what's going to happen in third or fourth quarter, but it's going to be interesting to see. But we can see, obviously, the overall market is down quite a bit, and we can, of course, see the annual returns. So we don't have a lot of years of data here, but 2020 we've seen a total return of the NAV about 11%, and then 2021 about 19%. So pretty good years overall. We can see the capital appreciation return here, and then this income returns, the dividends, and then obviously the two combined together here is going to give you the total return. So pretty good returns. Obviously, this year might not be as good, but we'll have to wait and see. Here's the little graph to say the growth of $10,000. So if you wanted to see your money grow over time, depending on, I don't think there's any deposits in here. You can see how much it would grow. We're not going to focus on that. We'll go down here to look at some of the assets because it's going to be the most interesting thing, and the most important thing probably. We have 99.95% stocks, so I do take that back. It looks like it's not 100% equities or stocks. It's 99.95%, and we have short-term reserves 0.05%. For whatever reason, I don't know why that's in there. Maybe somebody else can let us know, but it's in there for some reason. And going down here, we can see the actual different information about the stocks. So we can see the number of stocks inside this fund. So obviously, when you're buying this fund, you're getting plenty of diversification. That's the whole point of it. All equity, all-in-one ETF. It's probably going to hold a lot of stocks here. And we can see we have 13,586 stocks. That's a lot of stocks. So you're buying a lot of stocks with this fund, but that's the whole point of it. The median market cap is 150 billion. So that's some pretty big companies, a lot of money, a lot of market caps there. We have a price to earnings ratio. We have price to book ratio. Any of the stuff you guys want to take a peek at. Earnings growth rate about 10%. So lots of cool stuff if you guys are interested in those things. Bonds, we don't have any bonds, so we can just skip through that. And here are the different funds that are actually held inside here. So if you were to buy this fund, VEQT, these are the ETFs that you're basically holding. So you have the US Total Market Index ETF. We have the FTSE Canada All Cap Index ETF, the FTSE Developed All Cap X North American Index ETF, and then the Emerging Markets All Cap Index ETF. So basically getting US exposure, Canadian exposure, a mixture of the two, and then emerging markets, which is kind of more, I guess, I think emerging markets usually is like Europe and Asia and stuff like that. We'll have to take a quick peek to see what the actual fund is, but that's usually what it is. But we are getting heavily weighted into US funds. Actually, almost similar to what I hold inside my portfolio, or a traditional portfolio, about 44% US. So a little bit more on the US, a little bit, a good chunk in Canadian, about a quarter to 30%. That's very similar to what I hold inside my portfolio. And then we have a mixture of some other ones here, and then we have a small little exposure to the emerging markets, which actually I'm kind of a fan of this. Like I really like the way they structured this portfolio. I think it's really solidly set up to get some pretty good long-term gains here. And once again, market capitalization, so pretty much large companies. I'm a big fan of that too. I like large companies with maybe a little bit of mediums and some sprinkles of small ones in there. I'm a big fan of that. So I really do like this fund. We can see the different countries here. So once again, US 43%, going to be the biggest holding. Canada at 30%, Japan, United Kingdom, China, and some of these little smaller ones are more are going to be the emerging markets. But you know what? They're not crazy amounts. They're just little bits sprinkled in here just to take advantage of those emerging markets if they do have a good year. But I think it's very smart of them to do that. And here's the different sectors. So obviously, if we're going through sectors, it's important to take note. You don't want a fund that's all in financials or tech or anything like that. You kind of want to diversify, especially if we're thinking about long term. And if you just want to buy one fund, right? You just want to buy one fund, keep it simple. You want one that's at least somewhat diversified. So we have financials is the biggest thing at 20%, technology at 16%, industrials, consumers 12%, energy. So pretty nice spread here. Healthcare, basic materials, consumer staples with the fund. Nice little mix where we're not getting too much. I mean, obviously financials and technologies are the highest ones, but if you look at any fund right now, tech is obviously pretty high, and same with financials. Like they're pretty big industries. You're going to see them, and against most funds, you're going to have them as the number one thing. Especially if you're Canadian, you're going to see financials, and if you're US, you're going to see tech. So that's kind of the way it is. But regardless, we do see a nice mixture between all these different sectors here. And here we can see the actual individual holdings and the percentage of how much they basically allocate inside the fund. So this is important because we need to see how much we actually hold of each stock. And as I expect, most of it's pretty diversified. So the biggest holding is going to be Apple at 2.6% of the fund. So even the biggest holding is only 2%. It's a very well diversified fund, as you'd expect. Microsoft 2%. RBC is actually the third biggest holding, and then TD actually the number 4, Enbridge. So it's a nice mixture of Canadian and US stocks, and we can see that it's not super aggressive into any holdings. Most of the holdings are pretty much, obviously the top 10 are going to represent a good chunk of the portfolio, but we can see that it is well diversified with all the different stocks. You could export all 14,000 holdings. Not really interested in seeing them all, but you can get an idea of what the fund is investing into just by looking at the top ones here. And fixed income, it looks like we do have a little bit of these liquidity funds. I'm not too sure what these are, but there is a small percentage of the portfolio in those funds as well. You guys can take a peek at if you want to with that. We have different distributions thing, and I think for the most part that's pretty much everything that we're going to look at. We have historical prices, so you can see the different NAV prices over time. We can see the distribution yields and whatnot. Actually, we could look at this stuff for tax purposes, so this is important to kind of take a peek at. I've been doing a lot into research with taxes, and I've talked about this in some of my previous videos, how important it is to look at ETFs and what their distributions are and how it's going to be treated for taxes. And actually, I had a couple comments on a previous video kind of asking about more of the stuff, and I think it's important to check each fund individually because each fund individually works differently. So here we have an annual distribution once per year, about 1.58%, and you would think, okay, this is dividends, it's going to be whatever, but we have to keep in mind that we do have a mixture of different international stocks. So some of that's going to be taxed in a certain way, and some of it's going to be not taxed because it's Canadian, and ultimately it's going to also depend on what account you hold into. So obviously there's a lot of things to consider here. So we have income here. So this is going to be income based. So this is the fund. If it was based on income, this is what you would claim. This could be dividends, it could be other things, but we have most of the income or the distributions coming from income, but we also do have some capital gains as well coming in here as well. So it's important to note that even though you would think that this distribution yield 1.58% is probably just dividends, there is some capital gains in here as well. So you'd have to report that accordingly. Obviously it's not that much, but it's just important to note. And going down here we have some different some actual more specifically here, we can see it from the tax perspective. what each thing is. So we actually have some, so for 2021, we do have eligible dividends, obviously, and this would be from the Canadian companies. So if you held this inside of a TFSA or on a personal account, you would get tax benefits for holding eligible dividends. We have non-eligible dividends from Canadian companies. I don't think there'd be anything in there. Other income is zero, capital gains is zero, return of capital, so a little bit of return of capital, foreign income. So we do have some foreign income in there. This would be like the international one. So you are paying a good chunk and foreign income here, but keep in mind you only get taxed 15% if it's in a TFSA or whatever. It depends what account you hold it into, but you won't, because the dividend yield isn't super high, you won't be paying a huge tax here. You can see the actual tax here, it's really not that much, but again, important stuff to consider. So you know, if you're putting this account inside a TFSA and RSP, you have to do your due diligence. You have to look at the tax benefits. But honestly, I don't think it'd make a huge difference because of the fact that the fund does have a low distribution yield. But there's other things to consider as well. It's up to you guys to figure out what is the best account to stick this into. All right, guys, that's it for today's video. I hope you guys enjoyed it. I know it's a little bit long towards the end. We did a little bit of rambling there, but I wanted to do a deep dive so you guys can actually see and share my thoughts on the fund. Overall, I think the fund is really great. I think it's perfect for beginners or seasoned investors. Once again, that all-in fund type approach is very beneficial for a lot of people. It also kind of is really nice because people can just set it up, you can click it, and you can buy future shares very easily, and you don't have to keep checking your portfolio, you don't have to keep rebalancing things. It really takes the work out of holding a portfolio, and you can really, if you want to be 100% certain and 100% accurate, you can kind of define this as earning passive income in the stock market, right? You really don't have to do anything. You just click a button, you buy the fund, you show up, and that's all you have to do, and you earn money inside your portfolio from holding the fund. Everybody, the fund management fees basically do all the work for you. You just pay a small fee, a small, affordable, but very, very reasonable fee to basically allow them to manage the account for you. So anyways, guys, I hope you guys enjoyed this video. If you guys have any questions, like usual, let me know in the comment section. Take care. I'll see you guys later, and have yourself a good one.